Well, it's another week of losses on Dalal Street after the market failed to hold the recovery on Friday. The mid-caps continue to outperform the blue chips to post gains of 2% this week. On the Editors' Roundtable, we take stock of promoters' stake sale frenzy, which continues, the rise in options trading in India, why textile stocks are in favor, and what you can expect from the big Reliance AGM that happens on Monday. I'm Sonia, and it's a full house today. Prashant, Anuj, Nimesh, Nigel, the OG editors are back on the show.
What is the meaning of OG?
Original, right?
Okay.
That's what you are. What did you think it was?
Original gangster.
That's all of you as well.
Very tiring week, by the way.
Yeah.
I mean, I think by the end of this week, all of us were just happy that it's over. And especially given what happened between yesterday and today. You know, after yesterday's second half, because Wednesday it felt like the market got some momentum back. Yesterday morning, it looked like the market's finally breaking out. And then all of a sudden, yesterday's second half, and I think today, the whole day, the market just sapped you of energy and told you that, no, I'm not moving out of this range. And I think the mid-cap and small-cap action, honestly, was getting perhaps a bit too exuberant. So in that sense, I think Friday was a bit of a reality check, and I think more might be needed over the next few days.
But you know, when you party midweek, you feel like the week is very tiring.
Did you party midweek, Sonia?
No, I don't think we partied midweek, but Prashant has promised us that post the show he's taking us for drinks because he celebrated his birthday the last weekend. He didn't tell us he was talking about bricks and all. He didn't tell us that this weekend is going to be celebrated. Prashant, thanks for the. I mean, we're looking forward to it. Post Editors' Roundtable.
I never got that invite, by the way.
He's going to be announcing.
I said on air, right? I mean, I think what was that? I think you guys were talking about a treat. I said we'll do it after Sonia comes back. You were in Bangalore, right?
Yeah.
Early part of the week.
So today's the day. We'll be on the actual table.
All 5 years.
Well, you know, I promise I'll turn up. Let's see how many of you guys turn up.
But for the market, right, I mean, it's been a little frustrating also because it's so range bound between whenever it gets to 19,200, there's buying, you get to 19,500, there's selling.
Yep.
So in a sense, not too much happened this week.
Actually, you know, it's unfair to say not too much is happening. If you just look at the Nifty, it'll show that, you know, we are in a range, but a lot of action in the mid caps, a lot of blocks happening. I mean, for the second consecutive week, we are seeing blocks of over $1 billion, right? So there's a lot of action outside the Nifty and the Sensex. There are a lot of mid caps and individual stocks which are still doing good. A lot of the PSU stocks have done well even this week. You know, the momentum in the PSU just continues and it really outperforms. Like this week, on single day, BHL is up 10%. Hardly we've seen a BHL move 10% in a single day, right? So there is still a lot of momentum which is there. Yes, you know, a bit of liquidity is getting sucked out because of this large block, so that's impacting the flows a bit. But I guess, you know, from a momentum point of view, the FIs still seem to be quite active. While they are not buying in the secondary market, but in the primary market, they seem to be quite active as well.
There was a small hiatus when all those block deals were happening, and Nimesh, I remember I asked him, you know, to do something on closing bell. He said, "Thak gaya main ab."
Exactly,
Blocks.
yeah.
And then there was a lull, right? Nothing happened with the last. And it started with started how? It's like the pipe is gushing.
Yeah. And
Blocks and
again, if I have to believe the investment bankers and fund managers, there is still a lot of pipeline which is still pending. There is a lot more to come. So maybe in Monday, Tuesday, you'll see another large block coming in one of the names, which I think they reported as well, right?
So, you know what I was a little bit scared about was what you told me, that a lot of them are actually setting up family offices.
Yeah.
So you know, that got me a bit
You
scared.
want to be a bit beware of that.
Beware of that. And actually, June and July sort of spoiled us because, you know, we thought that the market just move up. Market can consolidate for long, and that like what the market has shown us. In fact, let's ask our guest. We have Ajay Srivastava of Dimensions Corporate Finance now joining us. Ajay, hi, good evening. Thanks a lot for joining us.
Good evening.
What have you made of this recent consolidation that we have seen in the market, and this violent consolidation, if I might add?
I think it's a wonderful thing because finally, I think even my wife thinks I can do some sensible work. She says, "What are you doing? The market is going up. You can pick up anything in the market." So I think now she believes that I do some sensible work in looking at what does not go down. I think that's the major theme is now. Are you into stocks which are correcting rapidly? Did you buy on a P expansion kind of a scenario, which were dependent on the flows? And now with the flows are relatively drying up on this side of the market, those stocks are the ones which are taking the beating. So I think the mood of the market, remain strong because you're entering the best festive season, but watch out because the cuts can take you down on some of the stocks. And therefore the mood is find stocks which can damage your portfolio, stay firm for what's going to come in the festivities. And you'll have fireworks in Diwali, you'll have fireworks in the market. Post January, what happens as Sonia says, hangover, we will worry about it.
Well, I don't know about a hangover, but I'm sure the market has some kind of hangover right now, given the kind of, consolidation we've seen. But Ajay, you want to wish Prashant? It was his milestone birthday this time, right? Any advice to him?
My God, is he 21? Is he 21?
21 into 2.
I look 21. Huh?
But any wishes for him, advice?
Oh, my wishes for him. He's the best guy I've seen who always smiles. From Delhi Times, I've seen NDTV. He is always smiling. Market could be 1,000 points down. He is still smiling and you wonder why. Market can be 1,000 points up. He'll never laugh. He'll smile. I think great job. All the best, my friend. God bless you.
Thanks, Ajay. Thank you.
Ajay, you're missing out on the malt, today, but I'll take your share, I think, today. Prashant, maybe
I will buy the
that's due.
shares. What are you buying? I'll buy the company shares on Monday.
Nigel wants to have everybody's share of the malt.
Oh, for sure.
Okay, but you know what? The big theme of this week really has been all the kind of promoters selling that we've seen. Not just that, the block deals that have taken place, right? Nimesh, take it away.
So it is unprecedented. We are seeing this kind of supply coming in from the promoters and strategic investors. 1.5 billion this week. For the year 2023, we've crossed almost $11 billion. So that's the kind of supply of paper which is coming. For this week, I'll just run through quickly the names. The biggest block this week was in Coforge. PE investor, which is Barings Private Equity, sold their entire 26% stake and raised 8,000 crores. So that was a large block. This on Friday, which is today, there were 3 large blocks. Paytm was the big one, and Financial sold 3.5% stake, raised close to 2,000 crores. Minda, where the promoter sold 2% stake and they raised 450 crores. And Ember Enterprises was another block where the private equity sold 4% and they raised close to 350 crores. But this week also marked some large other deals as well. Manappuram Finance, 9.9% of the company's equity got sold. The private equity investor backed by Apex Partners sold their entire stake, so it was a clean-out trade. They raised close to 1,400 crores. And Max Financial was another large block where 3.5% equity. The promoter entity, which is Max Ventures, sold 3.5% stake, and there they raised close to 1,000 crores. So, as I said, it's unprecedented. I spoke to a lot of experts as well, and even they believe that it's not seen of or heard of. In a Coforge block yesterday, 26% got sold, and the stock is up 10%. This is unprecedented. I have not seen in my career a promoter selling out. It's a zero holding company now. There is no particular promoter as far as Coforge is concerned. So it looks like this trend is likely to continue.
Okay, well, the trend is likely to continue, but let's take a look at what Anuj is focusing on today as well, at options. There's been an exponential rise in options for India. How do we stack up against the world, and what are the reasons for this? Anuj, what are you looking at?
Eye-popping numbers, Sonia. Let me just go close to the wall and explain this in the kind of numbers that we have. What we have seen in our markets over the last 5 or 6 years is an exponential rise in options activity. First of all, let's just put things in context. We are a big market, but nowhere near the biggest market. That is, of course, the USA, which commands 44% of the world's market. China is next at almost 10%. Japan is at 5.5%. We are number 4 market, but proportion is very less, 3.3% of the world's market cap. Against that, look at the notional turnover, daily options turnover. This is in dollar billions, mind you. The US is at $1394 billion. China doesn't have too much of an options market, and so is the case with Japan. These are more of a cash markets. Look at India's options activity. This is the data provided by JP Morgan. $3,393 billion of daily turnover, options turnover. Now, keep in mind, this is notional because, you're looking at Nifty and Bank Nifty, which are, of course, 18,000 and 44,000 thereabout. Another plate would come up for you. Where exactly is this rise coming in from? Now, this is fascinating. You have the Nifty, which is almost $1176 billion of turnover and average open interest of $81.8 billion. The Nifty is higher in open interest than the Bank Nifty, but the Bank Nifty is more in terms of turnover because the Bank Nifty is a larger index in terms of the value. So $1,705 billion. And I think the next number is the one which tells you what exactly is happening. Nifty Financial Services. This is very recent. This just started about 6 months back or so. The volume started to pick up. This is Tuesday expiry, mind you. $665 billion. It's almost reaching half of Nifty already, and $16.7 billion of open interest. In stocks, of course, the open interest is very high, $27.6 billion, but because stocks are lower priced, so that's why you have $42 billion of average turnover. Now, what is very interesting is where exactly, which kind of options are generating the highest volumes. We have the weekly options expiry now. Remember, 90% of the options which are being traded are for the current week, and 60% of the open interest is from the current week. Now, why this discrepancy? Because in current week options there's more trading, and in far week options, of course, there's more of holding the options for longer. Fin Nifty has seen exponential rise in activity. That clearly is the one which turns out to be the big money spinner for NSE as well. And I think NSE has now smelled that there's an opportunity. What they're doing is they're now changing the expiry of the Bank Nifty, because on Thursday you have both Nifty and Bank Nifty, while on Tuesday itself Fin Nifty is generating so much volume. So what is happening? Till now, Nifty and Bank Nifty expiry is every Thursday, Fin Nifty is every Tuesday, and stocks is last Thursday. From next month, Nifty stays on Thursday, Bank Nifty moves to Wednesday, and Nifty Financial Services happens on Tuesday. So Tuesday, Wednesday, Thursday, you have expiry, which is going to be very interesting. And of course, BSE throws in its ring as well, and Friday, that will also have expiry of Sensex. Now, who's driving this? It's retail and prop desks. Just look at some of the numbers in terms of what retail and prop desks have done. This is volume to open interest. It was 25 times in 2020. It's moved up to 70 times. Compare that to FIS, 10 times versus 12 times. DIS, of course, they are not allowed to do intraday trade, so that's why they're not taking any leverage. DIS 0, and it's now 0 as well. And of course, in terms of volumes versus the overall volumes, you have the retail and prop traders, which accounted for 62% in 2022, and now account for 84% of the overall volumes. And it's catching up in the US and Europe as well. In US now, 25 to 45% volumes are happening on same-day options. This proportion was 10% pre-COVID. This is very interesting. And as I said, the BSE is also trying to milk in, and you have BSE's market share, which has gone up to 5% now in options market versus nil it was in 2020. And if you're looking at the expiry day market share, which is Friday versus Thursday for NSE, BSE has already reached 15%, though it's unlikely to translate into P&L gains for them, because a lot of this will go towards the mandatory settlement guarantees. But a word of caution, as you will remember, there was this SEBI report which said 90% of the options traders lose money, and the only ones making the moolah are the brokers and the exchanges, because these are the ones they make money whether you win or lose. But phenomenal rise in options activity, Sonia.
Okay, phenomenal rise in options activity. Thanks a lot, Anuj, for that. Well, let's move on.
There was that famous saying, right? Or not saying, there was a question which was asked, where are the customers' yachts?
Yeah.
Right? I think the last thing which Anuj said is that who makes money?
Yeah.
And I think that SEBI study was very instructive. Actually, 10 years ago, the share of, if you look at F&O, futures was 90%, options was 10%, exactly
Now it's
flipped.
reversed.
90% and 15% or so. So big one.
Wow, crazy stats there. But let's move on. The textile space is booming, and many textile stocks, whether it's Gokuldas Exports, Himmat Singh Seed, have gained over 10% this week. Nigel, interesting, right? I mean, they've come back after a while.
Well, that's right. The textile stocks were buzzing around. So I said, let's focus on a few of these names. And why were they buzzing? For KPR Mills, well, there was that big Fidelity block that took place, 1% odd, which got the stock excited. But otherwise, these stocks were buzzing. So I said, let's put out 6 big reasons why, in fact, they were looking up this week. One is the global retailers, they've reduced inventory. Whether you're looking at apparel segment or you're looking at even the large retailers, Walmart, Nike, all of them, the inventory levels at one point of time, they were looking at destocking. Now the hope is, since inventory levels are lower, maybe they'll start restocking. So that's one point. The outlook, though, that they've given is more or less mixed. Walmart, they had a very good showing in Q2. For Q3, they went ahead and they've raised their guidance. TGX, well, they are saying that the overall volume growth will be around 3 to 4% for the fiscal, which is good. While on the flip side, Target, they're expecting a degrowth, but they're limiting it to single digits. So commentary a little bit mixed, though more on the positive side. Next up, if we're looking at the demand revival commentary from all the managements that came out, Q1 was a little bit softish, but Gokuldas is saying their interactions with their customers are quite positive. So that's one management. The other one is Welspun in there. They are talking about Q2 being good. Remember, that's ahead of Black Friday as well as ahead of Christmas. So they are quite optimistic out there. And Himmat Singh as well is saying that demand is fairly positive and stable out there. While Welspun, Indocount, in fact, they saw a bit of a degrowth in the first quarter, but yet they maintained their guidance for the year. So on the whole, the commentary that came out was positive and a little bit optimistic about the coming quarters. Next up is the FTA discussions. Remember, India has been having discussions with UK, with Canada, as well as the EU. Just to give you one data point, the total market potential out there is $21 billion from the UK itself. India is catering to just 1 billion out there. We are behind China, behind Bangladesh, and even behind Pakistan. So there is some kind of headway with regard to this FTA discussion. Then it opens up a whole new market for the Indians. And in fact, it reduces or it increases our competitive advantage as well. So that could be another point we should look at. Finally, if you're looking at the US market, well, the imports, both on the cotton sheets as well as on terry towels, they have gone up by a couple of percentage points. And China is losing out here. So it shows that we're increasing our penetration into the US markets. And finally, the problem pocket has been that cotton prices have been falling, yarn prices have been falling more. So spreads were unfavorable. Now maybe that will turn around. So that's the hope out there. Risks remain. If US goes into a recession, that will be a bit of an issue. If the spreads don't improve, that will be a bit of an issue. So we're talking about, right, the data is looking very, very good from the US, which is not very, very good news. And maybe they'll keep rates higher. Maybe the textile space could be one space that will see increased demand because the inventory levels are so low out there.
Actually, completely different segment, but we had TTK in the morning today, right?
Yeah, who said
but
the thing.
pressure cooker, they said the same thing, that inventory buildup has happened, but it'll start correcting itself by the end of the second quarter. Third quarter onwards, things should look up.
And for these guys, it's important, right? The second and the third quarter more importantly, because that's where they start ordering yet again for Christmas and Black Friday as well.
Nigel was inquiring about some pressure cookers, some plans to do some cooking over the weekend or something.
No, Lata ma'am, give me all the rates about all the different kind and different prices of pressure cookers as well. But Mr. Jagannathan told me the stainless steel one is 2,000 rupees. At least I'm clear on that.
But Ajay, coming to you on a couple of these spaces, right, that have come back in a big way. But overall, if you look at it, the consumption patterns are slowing down a bit compared to that post-COVID boom that we had. How are you approaching this space and what do you like, apart from the alcohol stocks?
Okay. Here we go. Okay. I think, I think this sector is a very small sector in the market at the end of the day. You can't make decent returns out of it. It's not done well for a long time. And even when it does well, the ratings are very poor, the Ps are very poor. There's no capital market kind of story building up there. There are a couple of stories when you mention about the towel story, which is becoming a domestic story from the international. Bottom line in India has always been that domestic stories get you better value, export stories don't give you value. And that's the underlying thesis of the whole Indian market. So all the companies which are moving towards India as a major market, and I think one of the large towel companies has done that or announced that, I think they will get better value. Companies focus on exports, their valuation will struggle, and I don't think they have a very valid case for being a capital market commitment. There's so many more things happening in this country, so many better, exciting new companies. Almost 400 new, different companies of industries have come in the country in the last 2 to 3 years, new IPOs. I think textiles, export companies possibly would be on the lowest rung of priorities. If I really have nothing to do in life, I may buy some of them. But on an ordinary day, I don't think so.
I think it's Buffett who has spoiled the mood for textile companies. Berkshire was a textile company. Right? He sold it and he said, well, that's the worst mistake I ever made. And then that's colored the view on textile ever since, not just here in India.
Across the world.
Across the world, absolutely. Well, we'll take a quick commercial break here. Ajay, of course, is still with us. We'll come back. Reliance's AGM is scheduled for Monday. And that's going to be a big one. We'll get you key expectations of what to watch out for when we return.
Welcome back. You're still watching Editors Roundtable on CNBC TV 18. We're going to talk about the big event upon us, which is the Reliance AGM that happens on Monday. Now, here are a couple of things that you can watch out for from the AGM. Some updates on the business, of course, and the partnership announcements that the company has made. But the IPO timelines will be keenly awaited. Now, remember, Reliance in the 2019 AGM said that they will list the telco and the retail business within 5 years. Now, with 4 years already behind us, the investors, stakeholders, and the industry is keenly awaiting whether any kind of timelines will be announced in this AGM. Now, BofA Securities released a note where they said that the AGM is generally not a forum for the company to announce timelines, but given that they just did that deal with QIA, perhaps for Reliance Retail as well as for the Jio business, some indications could come through. Any potential value unlocking announcement may help deleveraging. So that's the big thing to watch out for. Apart from that, on the telecom business, a couple of things that we're looking out for. One is any updates on the 5G rollout and the JioAir fiber. any updates around the recently launched Jio Bharat phone, as well as they may focus on some partnerships with Netflix on prepaid bundle packs, etc. So that's for the telecom business. For the retail business, of course, we are awaiting more details on QIA, the investments that QIA has made in Reliance Retail, and any indication of the IPO as well. On the energy business, any update on the investment in clean energy? The company is also looking to set up gigafactories in both solar and the battery business. So that will be keenly awaited. But if you look at the stock, right, the stock has been one of the big underperformers. In fact, this week and month, the stock has already lost about 5 to 7%. So Ajay, I want to toss this question to you. As a Reliance shareholder, what is the most important thing that you would watch out for? And is there anything in the AGM that can be a trigger for the stock?
I think if you're a Reliance shareholder, I would say sell your stock and buy something else, because it has not only underperformed in the last 1 month, it's underperformed for the whole year. If you look at the whole year, I think it's roughly about 10%, which includes the geo-financial price of today's market. In a market which has done such wonders to the major stocks, you are sitting on a 10% stock. That's one. Number two is, we need to understand that Reliance core business retail is an 8% EBITDA business. It's among the lowest profitable business. Yes, you can be a Walmart, but Walmart doesn't fly or give superior returns to the market. It used to be called a widow stock at one point of time for the dividend yield it comes. Reliance is building up a retail, is raising equity, but a lot of debt is sitting on the balance sheet at this point of time. So whatever Reliance does at the end of the day, there are lots of debt which it borrows and continues to borrow at this point of time. So there is huge capex requirement, and with an 8% or 9% EBITDA business, the valuation can't go very far anywhere in the world, except India leads apart. So I would say the thesis that you can build scale, you can build volume, build the biggest company, but for a shareholder, the returns would be very marginal, because your core businesses, which is retail, is at 8% margin. Your petroleum used to be at 28% EBITDA margin, and you are borrowing heavily to build the business. I think both of them are a recipe that investor returns will not be anything greater than, or must be much lower than the market. So to my mind, this is one stock which let the institutions own it. There's no point retail owning it. Yeah, I know we love it from the past. Reliance has to be owned by everybody. It's
right.
The greatest thing, but not the best place to put your money given what's happening in the rest of the market.
Ajay, I want your thoughts on the NBFC space next, because I happened to host a panel discussion in which we had the top 5 NBFCs. And one of the NBFCs, Piramal Finance's Managing Director, Jairam Sridharan, actually came out and said that, the next credit event or the credit cycle is actually just months away, not years away, months away. And that came as a surprise. I mean, not just to me, but others on the panel as well. And by the way, Piramal has exposure to the unsecured segment. He was, to be sure, talking about the unsecured segment. Let's just actually play out that soundbite. And Ajay, let's just ask you for your views after that.
I think we've all got to imagine that whether we can see it coming or not, a credit cycle is coming, right? And now, which part of the segment it might come from?
How many years out, you think? I mean, best guess.
You use the wrong word there. I would say months. You look at the data. What do we see right now at the industry level? We see secured lending products, risk continuing to come down across the full industry level. You see personal loans products, risk was coming down for a long time and now it has stabilized. And you see credit cards, it was coming down, it stabilized, and now it has started going up. So credit cards has gone up. Within personal loans, which look stable, if you split it up into small ticket and large ticket personal loans, small ticket personal loans risk has already gone up compared to 6 months ago. So credit cards and small ticket personal loans risk is already up. MFI just went through a cycle 2 years ago, so they're not going to see any problems for a little while. But the semi-urban, urban markets, unsecured lending, is risk going to remain where it is today, 6 months from now? I would bet serious money against it.
Okay, with that, we have completely run out of time on this edition of Editors Roundtable. Ajay, thanks a lot for joining in. Have a great weekend. And to everyone here, to everyone watching, have a great weekend as well. We'll be back bright and early on Monday morning.